Today, folks, you are looking at the very proud owner of 197 shares of Google. To some, that might not be a lot. To some, that might be many. But this is the largest single stock position I have ever made in my entire investing career. And to make that position work the way it has today, I did sell a little bit of my Take-Two Interactive, the parent company to Rockstar Games, as we're betting on GTA 6. But I did that because in my TFSA, I was heavily allotted to Take-Two shares, and I was kind of underweight Google, and I wanted to kind of even out those positionings because I think Google's going to have a very near-term run-up. At least that's what I'm speculating on, and I want to make sure I capitalize that in a tax-efficient way because I believe the stock should be trading closer to probably around $2.50 a share. And if we do see a nice 50% run-up, I will take some profit thereafter, but I will hold some shares long-term into the future. But I want to break this down a little bit more in depthly, including the balance sheet, the things that I'm going to be recognizing in the upcoming earnings that I think will help propel the stock, and the thoughts around kind of the monopoly fine that's still going on, including the ever controversial debate around self-driving. So if you're on a path to financial independence, if you damn well one day want to retire early, hit that subscribe button, folks, because coming out of this crazy tariff war cycle, I mean, since April 8th to basically the end of June, information and technology is up 41.2%. Communication services, industrials, and consumer discretionaries were falling in third to fourth place there, with the S&P 500 giving returns of around 24%. If I was smarter, and I recognize this, that if you want upper weighted returns, you got to buy something that is a lot more volatile, especially in moments of fear, because yeah, the Qs coming out of that period, whew, baby, 32% return. Congrats to anybody that bought this or even levered it up with something like TQQQ. But I will respect and give honors to people that, you know, bought MO at the beginning of the year, or my more favorable positioning in the sin stock sector for tobacco, obviously British American, that is up almost 30% this year as well, comparable to actually the Qs, actually doing better than the Qs because the Qs are only up 7.8% this year. You had to have caught the Qs on the major dip, but BTI, you bought it any time in the last year, you've been crushing, baby. So congrats to those people. And I will say the same, that AT&T, I mean, the communication services in the US, even in the higher interest rate environment, have been doing so much better than the Canadian side of the border. I think now is a good time, if you're Canadian, to look at Canadian telecom giants like Bell. TELUS is my personal favorite, but I'm shocked, just utterly shocked at the recovery that has gone on just in the last year and a half in AT&T. So congrats to anyone that saw the deals there and picked up some cheap shares. Verizon, not nearly as impressive, but still coming off the lows quite nicely. So comparably, shifting again into the world of tech, as many of you know, I did pick up some Meta on the dip during that April crash that we did exceptionally well on. I should have went a lot heavier there, but you know, hindsight's 2020, and the only thing I can look forward to now is that I think Google is the only one that's got to catch back up and alleviate the fears that investors have around it that I think are a bit over-exaggerated. As I've told you, I think the best way to make money in the market is to recognize that institutional investors do not like uncertainty because they have to get returns for their investors. I mean, when you look at BlackRock, people think Vanguard, these companies have control over the entire market. They don't. These companies just hold our money. They invest our money, mutual fund managers, you name it. And when we get into periods of uncertainty, especially mutual fund managers, they don't want to show lackluster returns when they can get a 4 to 5% off a treasury. So if we go into very volatile markets like a tariff war, even though we don't know the outcome, all that money is going to pour into treasuries in the meantime, and the market will over-exaggerate a sell-off to the downside, at which you can capitalize as an individual investor, recognizing that and buying those opportunities where you see fit and capturing some of that upside. But you have to keep in mind the same thing happens in both directions, especially in a world right now we're in a more speculative environment where kind of the meme stocks, the YouTuber stocks, your Robinhoods of the world, there's a lot of stocks out there that are just absolutely going parabolic right now, offering incredible returns. And again, when there's more certainty in the market and people want those returns that they think they can get in a shorter time frame, they will run in that direction. And yeah, that's what we've seen happen, right? So the stocks that haven't caught the bid yet, of course, Google, Apple's still trading down this year, but I'm not as comparably a fan of Apple as I am Google right now. So the only thing I can continue to buy, where I don't think the run-up has been justified by any means yet, is Google, because the uncertainty is leading institutional investors, managers of mutual funds to sideline that stock for now. But I think Google is about to have its day, and we'll talk about a few things that I'm just kind of laughing at continually, because anytime I point out facts to Tesla shareholders, they always come down my throat like I'm an idiot or something. But I mean, we've seen the Ford CEO recently basically say they think Waymo is a much better, self-driving, operating vehicle with the systems that they're currently using. On Reddit, the jokes were absolutely hilarious. So mo better or way mo better? thought that was hilarious. Waymo active robotaxi. It's Waymo better. Waymo together strong, baby. Yeah, if you kind of read through some of the comments here, like newsflash, Ford announces Tesla FSD deal dead in favor of Waymo. Tesla stock up 20% on this news, which was also hilarious. And a lot of people do point out the same thing I do, and I'm still a big Tesla fan. But they really have to get through some of these hurdles before I'd be that comfortable reinvesting in them, considering I get a great business with Google at a great value with all this extra stuff as upside. And I think that's something we've been reiterating on this channel pretty relentlessly, is also Uber has been more or less partnering with Waymo to start building out rides, which, I mean, come on, seriously, like if you're in any one of these cities where Waymo's launching right now and you just pull up your Uber app, you can just get one. You can't get a Tesla on Uber right now. So, I mean, just something to kind of, get the juices rolling on some of those cherries for Google stock. Right now, I do also want to point out the hilarity of trying to figure out why Tesla's been using Lidar is what's inside family.
And then we've got this one that has Lidar on it.
They pointed out a Tesla manufacturing plate on this Tesla that has Lidar on the top.
Look at that. Lidar on the top, manufacturer plates, and the robotaxi right next to each other.
And I was talking about this, trying to figure out why, and the only thing I can put together is that they're trying to build out some models that can help integrate into the vision for just purely using cameras, right? But the problem is we've seen phantom braking because of sunlight and stuff like that in Tesla's cameras, and I'm not sure how they're going to work their way around that. But we can see that for data collection and validation of its vision-based self-driving system, rather than as a core component of the production vehicle autonomous driving capabilities, while Tesla acknowledges Lidar's effectiveness in certain situations, particularly in changing weather conditions, they have chosen to focus on camera-first approach for their self-driving technology, and it's going to be really outright landishly laughable if Tesla ends up pivoting into using Lidar because the regulators demand it. You got to keep in mind the scale that you see going on with Waymo could scale infinitely as much as they wanted to. And a lot of people say, oh, they should have been scaling more. Tesla's going to catch up quick. No, they won't. It's all purely done by what regulators want to see. And if the regulator says, hey, there's been issues, yeah, Tesla self-driving is great, but there's these edge cases like glare from the sun. If rain comes out of nowhere, like, can Tesla survive these with just vision? And if not, they're going to tell them that they're going to have to put Lidar on these vehicles. And at that point, I don't know how Tesla, these bulls don't become more bearish, because now they have to integrate all this new data that they just don't have built out for, right? As Tesla reports a recent 14% decline in vehicle deliveries, marking the second straight quarter year-over-year drop. They've been seeing a leveling off, again, comparably over last year. If you just look at the last quarter, they are up slightly on deliveries, but we're not back in the 400,000 plus vehicle delivery mark quarter over quarter that we were in. So we do know Elon has been really detrimenting the company and making it very toxic from all the stuff he got involved with politically, which today we're still seeing the two boyfriends and the breakup continue. That is not good and is not benefiting Tesla shareholders at all, which I think is deplorable as a CEO who's supposed to be looking out purely for the best interests of shareholders, and we knew that this was going to be the case. So it's going to be neat to see what the shareholders meetings do, but clearly, the fondlers of Elon, the shareholder base, continue to be strong, because it's up 4.69% on this news today. Is clearly Tesla's not a car company and nobody cares about cars anymore, even though the company is purely unprofitable, and all their profitability in the last quarter came just from purely interest income. Like, literally, they wouldn't be profitable without interest income. So I don't know what the big short-term bull case is on with all the risk you have to take on with this company today, when you could just buy Google, get a really non-risk company that is proving cash flow is 150 billion in cash, lots of growth ahead of it, and is still the leader in self-driving, no matter how you want to look at it. But Google stock is seen as a mega cap pick in a breakup scenario. And this is what I've talked about, where a lot of the concern is if Google has to divest, but depending on what they have to divest, which we will find out in August, because that is when we're going to get to see the remedies that they've already been fined for their monopolistic behavior through Apple partnering, paying them 20 billion, which you could look at it many ways. If they can't pay Apple anymore to be the default search, we'll see how that pans out. They saved 20 billion, but who knows if Apple pivots with another company. Time will tell how much that detriments them, as they do own Android. So they did have a monopoly over the phone market, because almost all Androids are Google. So it's like, they had the lock-in with iPhone by paying Apple, and they owned Android. So it's just like they had a dominance over phone search. So we'll see what happens, but Alphabet could unlock significant shareholder value through a full corporate breakup. And if they do decide to do this, as mentioned, same with Apple, like if you split up any of these businesses, if they were spinned off into other companies that were publicly traded, they'd be worth significantly more on their own than under the Google brand, because the cloud growth, many of their other growth vectors would be significantly worth 30 to 40 to maybe even 50 times multiples on their own that Google's just not justifying. But they're claiming cloud alone is worth $56 per share. So, I mean, if Google stock is trading at 179, almost a third of this today is just they're claiming is cloud cloud potential in value. While maintaining a neutral rating on Alphabet, the broker argues that it would see Google as the top mega cap pick if it proceeds with a complete breakup, because then you get the spin-off shares, right? And we know those spin-off shares would be hyper valuable, but we don't know. This is all speculating in the future, right? So if we look at like even Barron's, they're expecting solid earnings from Alphabet as AI search is Google's war to lose. This is a really interesting article, but reiterating a buy rating with a $200 price target, and I think we're gonna have no problem getting back up to $200. I mean, we're barely $20 away now, so I think just a matter of patience will get us there regardless. But as we head into earnings, what I will be looking for, and again, a lot of people are looking at search saying, "Oh, this is the end of search," but come on, guys, like ChatGPT's been around for a while now. They've all been around for a while now, and search is still continuing to grow revenue. As Sundar said, that search, like the actual number of searches individuals are doing, are going up because of the value they're seeing in search. How I'm still doing Google searches, and we've been saying that everyone seems to be more apt to do Google searches on a laptop over a phone. But I have started using Gemini and ChatGPT fairly regularly. They are integrating into our regular lives. So I don't think, this is going to change much in the short term. So, I mean, so long as we continue to see growth in search, I don't know how you can be bearish when you look at some of the other vectors where I'll be paying most attention to is Google subscriptions, platforms, and device services. This is massive growth, going from 8.7 billion to 10.3 year over year. And with this new onslaught of VO3 and the Gemini upgrades with the assistant and stuff, man, at $250 a month, I think we're going to see a massive explosion in subscription growth. And I think it's going to start making people recognize that, yeah, they have other growth means here that will eventually surpass search. And you got to recognize that they're going to become more of a business similar to Microsoft with a software as a service subscription-based platform, which will solidify some of their value, hopefully pushing them toward a 25 to 30 times PE multiple. And same with cloud, right? Like look at cloud going from 9.5 to 12.2 billion. Like these two companies, or these two part of their businesses alone equate to some pretty extensive value. And again, obviously search is like just 50% of their entire revenue. And again, that is a concern moving in the future, obviously. But again, guys, the value it's priced in, like, come on. I could be completely wrong, and obviously I'm speculating here, but I just, as somebody that is truly a value investor, like I look at the numbers, I can only look at what we've seen in the last quarter and the last year, and everything I'm hearing from the bears just does not line up with the numbers that I'm seeing projected moving forward, guided for. And I think you'd be nuts to argue Google, the words coming out of their mouths versus a bunch of random people on the internet. So time will tell here if we do end up being correct. But yeah, I am perfectly fine getting access to genomics. I get to own SpaceX through Google. It's the only company you can buy publicly traded with SpaceX shares that they actualize, and they've shown some pretty large gains in on its own. I mean, you're getting, again, quantum, all that stuff, guys. Like, come on. You got to recognize that Google's got a long ways to go, and I imagine eventually being a Mag 7 stock now that is now the cheaper one, where it used to be Meta. Meta used to be the child on the playground that was bullied, and now it's Google. So it ebb and flows. You pick the ones that are most bullied at the best values, and it seems to have worked out pretty substantially time and time again. So we'll see if we can bang it out again and make a good quick 25K gain, and then lock in some long-term shares thereafter. But I'll pass the question off to you. I'd love to know what you think about Google in that comment section below.